Away from our top stories, the Nigerian equities market is currently trading in negative territory despite yesterday's gain. Usoro Essien, head of research at Greenwich Trust, joins me in the studio for a midday market update. Thank you so much, Usoro. Pleasure to have you on the program as always.
Thank you, Esther.
We're looking at big caps under pressure at the Nigerian Stock Exchange in midday trade. Now, we saw the market also taking a breather yesterday, and yesterday was just actually the very first time the market recorded a gain since the beginning of the year. Now, we know there are a number of headwinds that investors are keeping closely watching. I suppose key among them is the election. But beyond that, is there any good news? Is there any what catalyst? What could spur this market back into sustained positive territory?
Well, two things. First would be the fact that most of these stocks, equities from different sectors, banking and FMCG in particular, are trading at huge discounts to where their emerging market peers are. And you know, these two sectors took a heavy beating last year. So for bargain hunters that are looking for discounts to enter these stocks at relatively cheap prices, this is the right time. Between now up until March, you would have opportunities to take positions. However, you rightly said the headwinds from macroeconomic factors, crude oil prices being the dominant one, is really a problem, because for foreign investors, the crude oil prices directly have a link to our exchange rate, and as long as the fear of the exchange rate continuing its spiral downwards to a region of say 220 to 250, they would want to wait to see a bit of stability in that exchange rate before they come in heavily and take positions.
Yeah. Where does that leave companies, stocks like Seplat, Owandu? We had very good successful stories from these companies last year. We of course still have the local content where we saw indigenous players now playing in the big league upstream. So where does that leave these companies in terms of profitability, profit margins, and the overall outlook for exploration in 2015?
Well, as it is, basically their destiny is strongly tied to the price of crude oil. As it is now, it's hovering around $45 per barrel. A lot of these indigenous upstream companies came in and took off assets from the majors in the marginal fields, and we know that the cost of drilling from those fields tend to slightly be higher because of disruptions and issues with the communities. So it's definitely going to affect output and forecast. So the turnover for those companies, definitely our models are going to be tweaked downwards because you do not expect them to be able to meet revenues they had projected earlier on.
Before now. Yeah. So what about bank stocks? Because they still remain the most liquid on the Nigerian Stock Exchange in terms of traded volumes on a daily basis. We know that most of the regulatory headwinds have been targeted at these banks, and of course everybody has to adjust their belts, not just at the fiscal level, but even the banks themselves. So, and of course we're also hearing talk about lower earnings in the first quarter. So that, I suppose, could have left investors disenchanted. But for the banks, what names would you put your money on? What names could investors look to, perhaps even as a safe haven?
For safe haven and a volatile market, it's very tricky. However, I would place my bets around the mid-tier. Banks like your FCMB right now are trading at almost 2.5 times book, and that's a PE, and 0.3 price to book. A bank like UBA, that's very attractive at that price. Even a bank like Skybank. These mid-tier banks are definitely undervalued, in my opinion.
You think investors can look past the headwinds, past the dark clouds at the moment, even foreign investors, and put their money in these stocks? Yeah,
because investors would look at where those stocks will probably tank in price, and I think that give or take another 20% depreciation maximum for those three counters, I think they've almost bottomed out. Yeah.
Okay, what about your expectations for overall market performance in the first quarter of the year? We have, I guess this is where most of the headwinds are concentrated. We're going to have earnings, we're going to have the elections. Of course, there's still the insecurity situation in the northeast part of the country.
Well, you already saw, because of the fears from both the domestic and the external headwinds, you already saw what happened last week. Last week, the market did 13% negative. It's definitely double-digit negative we're expecting for Q1. However, that's expected even on the back of just elections. The good story for equities would come H2 this year, not H1 in my opinion. And it's only investors that have triggers for stocks that have reached what they believe are their support levels, and they can actually take positions at those levels and exit. So you just see intermittent bull busts.
Okay. When
you see a rally for stocks that investors feel, okay, it's really at a very good discount. Yeah.
What about consumer goods, the brewery sector? Well, the situation in the northeast part of the country, we haven't seen an improvement. So market share there, or any hope for increasing market share there this year still remains very slim. So I suppose competition is going to be a lot heated in 2015. But in terms of profit margins, do they stand a chance of at least improving that?
For the brewery sector, just coming from a consolidation, so for the mass market beer that came for stocks like your Nigerian breweries that just rounded up its consolidation, for the mass market beer, you'd expect their sales to continue rising, even though it will be lower single digits. For the premium segment of their market, I think they would actually have a decline, also single digit. So all in all, you'd probably see a slight decline Q1, even though elections and coming off from a festive season, you expect sales to be on the up, but Q1 is not really their strongest quarter.
What about at the regulatory front? We now have an acting Director General at the Securities and Exchange Commission. The outgoing DG has left. In terms of how the market is going to be propelled this year, how in terms of regulation, do you think that is going to be, or that is an additional concern for investors?
Well, for that, that will be on the back burner. That is a concern, but it's not a prominent one as faced with what the other headwinds that they're looking at right now. They'll probably factor that in when you'd see more of a rally in the market, and that's probably going to be H2.
All right, thank you so much, Usoro, for sharing that perspective with us. Pleasure having you on the program. Usoro Essien, Head of Research at Greenwich Trust, looking at the midday equities market here in Nigeria, still in negative territory.